Welcome to GRE. I'm your host, Keith Weinhold. If you're a real estate investor or small business owner, there's a pretty good chance that you'll have to comply with the new Corporate Transparency Act. What is it? What do you have to do? Who is it for? And you'll certainly get my unvarnished opinion about it today on Get Rich Education. When you want the best real estate and finance info, the modern internet experience limits your free articles access, and it's replete with paywalls, and you've got pop-ups and push notifications and cookies disclaimers. At no other time in history has it been more vital to place nice, clean, free content into your hands that actually adds no hype value to your life. See, this is the golden age of quality newsletters, and I write every word of ours myself. It's got a dash of humor, and it's to the point. To get the letter, it couldn't be more simple. Text GRE to 66866. And when you start the free newsletter, you'll also get my 1-hour fast real estate course completely free. It's called the Don't Quit Your Daydream Letter, and it wires your mind for wealth. Make sure you read it. Text GRE to 66866. Text GRE to 66866.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE. From Livonia, New York to Livonia, Michigan, and across 188 nations worldwide, I'm Keith Weinhold, and this is Get Rich Education. We don't do day trading, we do decade trading. Often here on this show, we are talking about the excitement and the virtues of real estate investing and expanding your portfolio. At other times, it's a slow down and check yourself episode. And that's what we have today when we discuss asset protection and government compliance with your real estate, especially if you've decided that it's worthwhile to hold them in an entity like an LLC or a partnership rather than in your own individual name. Now, I think that at some point, every real estate investor, you had to ask yourself, do you want to hold your property in your individual name as a sole proprietorship, or do you want to formally incorporate some or all of your properties into LLCs, limited liability companies? And then how will you group which properties into which LLCs? So you have this sole proprietor in your own name versus the LLC formation, those pros and cons. The benefit of the LLC is that it gives you asset protection. The downside of an LLC is that you'll have ongoing filings and fees with your state in order to stay in compliance, and you might have your own separate accounts and your credit cards for the LLC then. Well, you will. And there are surely more nuances than just those pros and cons right there. But now, if you do decide that an LLC is the route that you want to go, there is now a new federal law that you'll have to comply with, the Corporate Transparency Act, the CTA. Here for legal guidance and ideas, let me bring in the two attorneys that are part of my team to tell you about it shortly. And yeah, you're surely going to get my own opinion on adding another layer, another piece of administrative and documentation overburden onto the LLC ownership, though I think it's a pretty small layer. But nonetheless, this is a major change to corporate law, and if you own rental property, there's a fair chance that it affects you, so you should pay attention to this. As we near year end here, we've got a lot of great shows coming up on GRE. There will be a number of slack-jawed monologues that you tell me that you like. That's where there's no guest. It's just you and I, and I've got so many vital real estate insights that I can't wait to share with you. I'll also soon be unveiling GRE's 2024 home price appreciation forecast right here on the show. As for upcoming guests, in 2 weeks, the real estate guys Robert Helms and I will discuss your goals. Doug Casey and Tom Wheelwright are other returning guests that will be here with us soon. You are going to be both informed and inspired. Today, let's discuss the new CTA. Today's guests are father and son attorneys. They were last here with you and I 1 year ago. Garrett Sutton is someone that I first learned about actually quite a while ago through Rich Dad Poor Dad author and regular guest on this show, Robert Kiyosaki. On Garrett and I's introductory phone call in 2015, I found him a kindred spirit when I learned that he and I had each climbed up the same mountain to the highest point in Nevada. Garrett is a corporate attorney. He's an author that's sold more than 1 million books. You may have very well read a Garrett Sutton book, and he's been a regular GRE guest here ever since. And then 12 months ago, here on GRE, you were introduced to his son, Ted Sutton, that's eventually taking over the family law business. And in the past year, Ted has passed the bar exam. Congratulations there. And increasingly, Ted has been doing more of my own legal work there and doing a diligent job, just like his dad does. Garrett and Ted, welcome back onto the show.
Thanks, Keith. Great to be back.
Yep. Thanks, Keith. Good to see you again.
Yeah, it's always good to see you. It's interesting. When I talk to a friend and I say, well, yeah, I guess I'll consult with my attorney on that, increasingly, I'm talking about the son, Ted. In any case, they are experts at corporate formation and their ongoing maintenance, like for your LLCs. Now, today's topic is, it's not exciting like climbing to a state's highest point. So let's get into it, fellas. Tell us, first of all, what exactly is the Corporate Transparency Act?
Well, I'm going to let Ted take that question, Keith, because he's been in the weeds on this, reading the regulations and getting into it, because we have to report this for all our clients. Their penalties are pretty severe, so Ted has been handling all this. So go ahead, Ted. What is it?
Yeah, so as you can tell, Dad's kind of been shoveling stuff onto my plate, whether it's your work or the Corporate Transparency Act. But, I mean, at the end of the day, the Corporate Transparency Act is a really important law. It was passed in 2021 as part of the National Defense and Authorization Act. And when you set up a business, you need to file paperwork with the Secretary of State. But under the Corporate Transparency Act, you're required to report additional information to the federal government. It's the most significant corporate law to be passed in 40 years, and it does place a burden on a lot of small business owners out there. So under the Corporate Transparency Act, you're supposed to report 3 different types of information. The first is reporting company information, which is just about the company itself. So in most cases, that's LLCs, limited partnerships, corporations, any entity that real estate investors use to invest in real estate. And the second information is the beneficial ownership information. So this is where you own a certain percentage of the company or you manage it. And then the third piece of information is the company applicant information. So since we here at Corporate Direct set up these businesses for people, we would be a company applicant. So it does create additional roadblocks for business owners and real estate investors, because on top of doing everything with the Secretary of State, you're going to have to report all this additional information to the federal government.
And it's important to know, this is a one-time filing. So when you file your new corporation, you have 30 days to file this information to the federal government. You don't have to file it on an annual basis, but if you change your address, if you change who's the manager of the LLC, if you change ownership, you have to update that information to the federal government. But it's not an annual requirement.
All right. So you touched on what new businesses need to do there. And then, of course, existing businesses, they're going to have a deadline as to when they need to go ahead and take care of these reporting requirements.
Yeah, that's correct. So for existing businesses, there's 2 different timelines for when people are supposed to report under this new law. So if you have a business, like if you have an LLC, and it's set up before January 1st, 2024, so any entity that's in existence now, then you have an entire year to report this information to the federal government. And you report it to the U.S. Department of the Treasury. They have a branch called the Financial Crimes and Enforcement Network, or FinCEN. So if you're set up now, you have a year to report that information to FinCEN. But if you set up a business after January 1st, 2024, you have a really short timeline there. You only have 30 days to report that information. It does depend on when it's set up, but it's important to pay attention to this because if you don't do it, the penalties can be really steep. You can face either $10,000 in fines or up to 2 years in jail. So it's really important to know about this and just be on top of it because, we don't want our clients to face these.
We don't want anyone going to jail.
No.
We're going to help people file these reports, Keith, and you have to do it for every single entity. And then let's say you have a holding company and you've got 3 investors in the holding company that use their own LLCs to own the holding company. So you've got an LLC owned by 3 other LLCs. You've got to report for every single LLC in the chain. There's going to be quite a bit of reporting going on. And ultimately, you can't list an LLC as just the owner. You have to get to the point where you're identifying who the individual is, and you have to provide the federal government with a copy of their driver's license or passport. That's really significant information that the government is taking in. And if you change your driver's license, you have to amend this report and send in a new copy of your driver's license. So there's quite a bit of reporting to be done here.
Yeah, I think what we're learning here is the CTA is largely about reporting requirements, especially ownership information. And Garrett and Ted, I can't help but think, and I'm sure you, the listener, can't help but think, is this feels like a big brother watching sort of thing. I've read about how the intent, the reason behind the CTA is to help prevent things like money laundering and terrorism. But I'm just always wary when the government says that the reason that we're doing something and enacting this new level of regulation or administration is for your own safety. I'm just always wary whenever the government has something like that done. Now, this was passed during the Trump administration. Trump tried to veto it, but it was overridden. So I've touched on it a little bit, but why don't we talk more about the whys behind this? Why was the CTA passed?
You hit some of the points already, Keith, whether it's terrorist financing, money laundering. The regulations talk about people who are foreign nationals like Russian oligarchs and people in Iran or Venezuela who set up these companies in the U.S. to conduct illegal activity and maybe hold title to things. The reason they passed it was so the federal government can keep tabs on these people. And another reason why they passed it is that there are other countries in the European Union that have similar federal reporting requirements. Right? So, the United Kingdom, and there's a few other European Union countries that have this. So, I understand the intent, and I think all of us do. But the big question that you have to ask yourself is, will these criminals self-report?
Yeah.
Just because they have a law in the book doesn't mean that they're going to follow it. Murder's illegal, right? But people still kill people. It's very unfortunate. Yeah, and it's funny because the Wall Street Journal also had an article about it recently where the author touched on this point too. You have this law, but the question you have to ask yourself is, will these criminals actually report under it? And I think the answer is pretty obvious.
Yeah, it's sort of like recently when legal guidelines came to light around artificial intelligence, many soon found out or surmised that, it's probably only the good guys that are going to comply, so I don't really know who we're going to help.
Exactly.
Right. One of the things that's important is that this is a huge, sensitive database that the government is putting together. It was interesting, the same week that they announced that they would have this super protected database containing all this information was the same week that the government got hacked in the SolarWinds case. So I just wonder how protected this database is going to be, because this is going to be one of the prized jewels. You're going to have so much sensitive information inside this database. Now, the government rules say that if you hack this database, it's 5 years in prison. But when has a hacker ever been caught? I haven't read that news report.
Right. Yeah, I see what you're touching on here. And I guess this does sound burdensome from the perspective of the small business owner and the individual real estate investor thinking like, oh gosh, this is just one more thing that I'm going to need to track. I guess just specifically with what Ted laid out there and what's being asked for, I don't know that that alone is divulging things that people would want to hide, really, like the full name or your business name or your physical address. I mean, maybe that part alone is not that revealing. I'm just thinking more, whenever a new tax or a new administrative layer is introduced, it never gets repealed. And the result of these things, and this isn't really about taxes here, the CTA, but the long-term result of more government intervention is either higher taxes or higher regulation. And you know what? In 10 years, about the CTA, people are going to start to say, oh, well, that's just the way it's always been in America. That's my point. So I think about a lot of things. I think about the Fourth Amendment right to privacy. I mean, this is something that tens of millions of American businesses are going to have to comply with. So I guess philosophically, I think a lot about how it's another impediment to entrepreneurship and starting a business in this country. And this is really part of upward mobility potential that makes America great. So when we zoom back to a global scale, Garrett and Ted, I just think of it being less business friendly here in the United States. So maybe for you, Garrett, both practically and philosophically, I mean, how much does the CTA corrode that sense and that reality?
Well, my worry, Keith, is that they're going to be using this information for the wrong purposes. Now, the database can be accessed by the federal government, by state governments with a warrant, and by certain federal agencies, or foreign agencies rather. Think of MI5, the British Secret Service. This database can be reached by various government actors. And I just worry, I just see the worst side of things. As a lawyer, you always see the worst things. And one thing that I worry about is, for example, with political contributions. Let's say you make a political contribution and the party in power doesn't like it. They go into the database and they find that you are an owner of a farm that has wetlands. And they send the EPA out there to investigate your wetlands. I just worry that this database could be used for improper purposes. I'd love to think that the government was perfect and would never do such a thing, but I have my worries.
It's the camel getting its nose under the tent effect, potentially there. That's what we're talking about with the CTA. And Ted, you touched on some of the penalties for not reporting. There is an approaching deadline for complying with the CTA. Maybe some are still wondering, I know what you, the listener, are wondering out there, is there a way I can wiggle out of this and not have to comply with the CTA? So what about exemptions? I know that there is an exemption for larger businesses, for example.
Yeah, so I mean, you could wiggle your way out of it, if you were to just dissolve your LLC, but for asset protection purposes, we don't recommend that. And there are 23 exemptions under the regulations. I don't want to go through all of them because, they could easily put you to sleep. The most important one is the large operating company exemption. And so if your company, there's 3 requirements there. The first is that you employ more than 20 full-time employees, so 21 or more. The second is that you have more than $5 million in gross revenue on a tax return in a year. And then the third is that you have a physical operating presence in the U.S. So if you meet all 3 requirements, then you're exempt from reporting. But, for most real estate investors, the properties that they hold title in, for the most part, they don't employ anyone. Maybe they have more than $5 million in gross revenue and a physical presence. But for the smaller guys, the Corporate Transparency Act targets them. And so, if you meet the large operating company exemption, then good for you. In most situations, with the exception of the other 22 exemptions, if you're a small business, you're going to have to report.
And there's one wrinkle, Keith, and that is someone starting out could say, look, I'm going to have 21 employees. I know I'm going to make $5 million a year, but you can't prove that at the start. you don't have a tax return that shows that you have $5 million in gross receipts. So right off the bat, you're going to have to report.
We're all optimistic about our business ambitions, but optimism is checked there when you need to come up with something substantive if you are indeed trying to wiggle out of this. We're going to talk more specifically about how the CTA affects real estate investors with Garrett and Ted Sutton when we come back. I'm Keith Weinhold. You're listening to Get Rich Education. For a lender that's a specific expert with income property, you need Ridge Lending Group, NMLS 42056. In GRE history, from beginners to veterans, they provided our listeners with more mortgages than anyone. It's where I get my own loans for single-family rentals up to fourplexes. Start your pre-qualification and chat with President Chaley Ridge personally. They'll even customize a plan tailored to you for growing your portfolio. Start at ridgelendinggroup.com. ridgelendinggroup.com. You know, I'll just tell you, for the most passive part of my real estate investing, personally, I put my own dollars with Freedom Family Investments because their funds pay me a stream of regular cash flow, and returns are better than a bank savings account, up to 12%. Their minimums are as low as $25K. You don't even need to be accredited for some of them. It's all backed by real estate, and I kind of love how the tax benefit of doing this can offset capital gains and your W-2 job's income. And they've always given me exactly their stated return, paid on time, so it's steady income, no surprises, while I'm sleeping or just doing the things I love. For a little insider tip, I've invested in their Power Fund. To get going on that, text FAMILY to 66866. Oh, and this isn't a solicitation. If you want to invest where I do, just go ahead and text FAMILY to 66866.
What's up, everyone? This is HGTV's Tarek El Moussa. Listen to Get Rich Education with Keith Weinhold, and don't quit your daydream.
Welcome back to Get Rich Education. We're talking with Garrett and Ted Sutton. I wish we had a more exciting show today, but we do have a really important show today. It's about the Corporate Transparency Act, what that entails, why you need to comply with it, and more. We're wondering more. You had touched on it previously about properties owned in your individual name and how that's often not a good idea for protection and asset protection reasons. I'm really thinking more about practically how this is applied and some of the things with the structures that you recommend in there at Corporate Direct for an individual real estate investor that has decided that they want an LLC protection. For example, say that an investor owns properties in Alabama, Florida, and Georgia. Each of those states have individual LLCs. And then oftentimes there's the parent Wyoming LLC holding company presiding over those three states because Wyoming provides a good level of protection. Would all four of those, therefore the Wyoming parent and then the three children, Florida, Georgia, and Alabama, would they all need to individually comply with this, or how does this work practically?
If the reporting company exemptions don't apply, in most situations, then they're going to have to report. So you would have to file a report for the Georgia, the Alabama, and the Florida LLC, as well as the Wyoming LLC. There would be 4 reports right there that you would have to submit to the federal government.
And I also think about partnership structures. How about partnerships? I especially think about partnerships where maybe there are 4 partners that own one apartment building, and say some of the partners don't want to comply with the CTA. Have you run into that situation in there yet? What are your thoughts with partnerships and complying with the CTA?
A lot of it depends on whether or not they're a beneficial owner. So under the definition of a beneficial owner, it's either somebody who owns 25% or more of an entity or somebody who has substantial control of the entity. It's either or. So if they either have 25% or they have substantial control, which is management, then they would have to report. So if you were to have a 10% owner in a project who didn't want to comply with the CTA and they didn't have any management powers, then in that situation, they would not need to report their information. But if they own 30% or they were a manager, then in that situation, they would have to do that. We've tweaked our operating agreements a little bit to account for this because they would technically be on the hook, or the company would. We included provisions in there that discuss whether or not somebody's going to have to bear the buck if they don't want to comply.
But, well, it's not that you don't want to comply. It's just you don't have to comply. So, Keith, you're going to have syndications where you've got 50 people and they own, 2 to 5%. Those people don't have to report because they're not 25% owners. They don't have management control. So in a larger syndication, it's just whoever has the management control. Typically in an LP, it's going to be the general partner or the LLC that's the general partner. And then any owners of the limited partnership that own 25% or more are going to have to report. But typically in some of those large syndications, not many people own 25% or more. So they don't have to report.
There would be few or no limited partners in syndications that would need to report. As a CTA is written, you deal with a lot of real estate investors and business owners in there at your firm. You've been helping people comply with the CTA. Let me know, how has the real world client reaction been to this?
Well, a lot of people just haven't paid attention to it, Keith. As I said, it's been out there for 2 years, but even lawyers are just getting to understand it. The American Bar Association just put out an article saying, hey, lawyers, wake up. This law starts January 1st, and you better pay attention to it. We've talked to some clients who their lawyers say, oh, you don't have to file the CTA. And so there's even misinformation out there among the legal community because this is such a major change to corporate law that people have kind of put their head in the sand about it, but it's coming. It's coming in a few weeks, and you better be prepared to file this because the penalties, as Ted mentioned, are pretty darn significant, $10,000 and or 2 years in prison. So the federal government, with the Congress, when they pass this, they put in penalties to make sure that people are going to file this information. But to date, it's not something people have talked about, Keith. And so we're glad to be on your show to let people know this is something you have to do. And if you don't, the penalties are significant.
Now, for you, the listener, this might make your head hurt. Maybe you're thinking the same thing that I thought about when I first read about this a few months ago. You're like, oh, gosh, this is just one more thing I have to do. But legal firms like Garrett's and Ted's, they're there to make it easy for you. That's what they do. As I understand it, on top of any legal fees, the feds don't have any cost to file. So this isn't any sort of revenue raising sort of thing for them.
That's the good thing, Keith. I mean, if they had had a $100, $150 fee, people would have been pretty upset. But no, you don't. There's no fee associated with it. We're going to charge a fee for people that have entities set up in the past, but when we set up a new entity for you, the CTA filing is going to be included in our regular fees.
Is there anything else that our audience should know about this CTA? Perhaps something I did not ask about but should have?
People have been left in the dark about it for a very long time, and up until a few weeks ago, people are really starting to recognize the gravity of this whole law. If anyone out there has any additional questions about the law, go check out corporatedirect.com. We have several articles there. And then on top of that, you can head on over to Corporate Direct's YouTube channel, where I posted several videos on the Corporate Transparency Act there. And if you have any questions about it, just leave a comment and I'll get around to it.
It's hard to bring the CTA to life, but maybe a video can help you, the listener, go ahead and do that. So that's a resource for that with the CTA. And before we're done, you'll surely know how Garrett and Ted can help push the easy button on complying with the CTA for you. But fellas, before you go, do you have any last thoughts with respect, especially to real estate investors? This is outside the CTA. Anything that real estate investors really need to know today with legal changes or updates or things they need to pay attention to, since it has been a full year since we've had you here?
You're going to continue to invest in real estate. If you're a serious real estate investor, the CTA is not going to deter you. You have to file an LLC with the state. You have to pay an annual fee in most cases. The CTA doesn't require an annual filing or an annual fee. So I wouldn't let this new law deter you from investing in real estate. I mean, American fortunes are made all the time in real estate. And this is just one more little nuisance, but it's not that big a nuisance that you're not going to continue to invest in real estate.
Yes, this is more about the compliance part than the asset protection part. In the past, we've often had you here to talk about asset protection, and we've talked about how there are multiple layers, multiple walls in your fortress about asset protection. Number one is being an ethical operator. Then you also have landlord's insurance. You might also have umbrella insurance as another wall of that fortress. I've talked extensively on the show about how actually having a low equity position to avoid low-hanging fruit for potential litigants is another asset protection strategy, one that's often overlooked. And then after all that, you've got the LLC. That's how I think of it with the hierarchy, just overall as we think about asset protection. Do you have anything important to add to these different walls of your protection fortress?
It's important to just have an advisor on your team who's knowledgeable about all that, especially when it comes to forming an LLC and properly protecting your assets there. It's important to have somebody on your team who knows how to draft an operating agreement, knows how to properly protect your LLC, and on top of that, who is up to date with all these new laws that are coming out. So adding an advisor on your team, like a lawyer, an accountant, bookkeeper, anything like that, that would be really helpful, because if you have that person on your team, then your assets will be much better protected.
Well, Ted and Garrett are part of my team when it comes to asset protection and maintenance, like I just laid out for you there. And now they're helping you comply with the Corporate Transparency Act. So fellas, go ahead and let our audience know how they can hit the easy button and engage with you for the Corporate Transparency Act compliance.
Well, as I mentioned before, you can head on over to corporatedirect.com. We have a section there that discusses the Corporate Transparency Act and all the requirements. And if you want to set up a business with us, you can schedule a free 15-minute consultation on our website. We have a lot of paralegals on staff who've been here for a while and are very well-versed in corporate law, and they'll help you do your Corporate Transparency Act filings for you. So head on over to corporatedirect.com and we'd be happy to take care of you guys.
And Keith, I have to mention one more thing. And we're creating a streaming platform called Sunstream, S-U-N-N, Stream. And one of our focuses is on kids' financial education. And, traveling with Robert Kiyosaki around the world, we've tried to spread the message of teaching your kids about money. And so Sunstream will be having programs, videos on there to teach your kids about money. And if you go to sunstream.com/5tricks, you can get Ted's free ebook, which is 5 tricks to teach your kids about money. And so this is a great way for parents to begin the process of teaching their kids about money. And then you can also explore Sunstream, S-U-N-N, Stream, for all the programs we have on there, many of which deal with financial education.
I think we're beginning to have more success in America with kids' financial education over time, as you see that introduced more formally into curricula, and hopefully Sunstream can help some out with that. So thank you for that terrific resource. And again, if you, the listener, want to engage with Corporate Direct for compliance with the Corporate Transparency Act, I really recommend you move at the speed of instruction. Maybe you just kind of want to put your head down and think, oh no, this is just one more thing I've got to do. But you know what? If you just move at the speed of instruction and get a hold of them now, then you only have to put your head down once and think of this one last time. So it's been valuable and vital, fellas. Thanks so much, Garrett and Ted, for coming back onto the show.
Yep.
Thanks, Keith.
Yeah, one thing that I like about the Suttons is that they're such reasonable people. To review, the Corporate Transparency Act is a one-time filing with the federal government about reporting requirements. So it's not an annual thing, just one time, unless you have a change in status. So the CTA, it's not about the state government. The state is where your other regular ongoing LLC maintenance is focused. Again, for help with the Corporate Transparency Act, their website is corporatedirect.com, where they also have free 15-minute consults for new business formation, or you can give them a call at 800-600-1760. Thanks to the time and expertise of Garrett and Ted Sutton today. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.